Hello everyone, welcome back. We are solving 2025 May June paper 3 1 3. We are solving 2025 May June paper 1 3. This is the second part of the video, so we will be solving from question number 10 to 20. So let's get started. Question number 11. Some errors were made when preparing a purchase ledger control account. The incorrect balance was 15,830. The following errors were discovered. Refund of 270 from credit supplier had been omitted from the control account. The total of the discount received of $480 had been posted to the wrong side of control account. What was the correct balance of the purchase ledger control account? Okay. So if we had to solve this, then we need to look at the control account that we have. Let's imagine this is our control account here. Okay. And then this is our debit side and this is credit side. So what they are saying is the balance that we have in the purchase ledger control account means the credit balance, and that is 15,830. But this balance is incorrect. Okay, and there are two things that we have here. The first one is there's a refund of 270, but this has been omitted from the control account. So refund basically means when we make purchase, we write it here, and when we receive money, we write it here. Okay, now the money that we have received, if they overpay us, then we need to return that amount and the refund will appear on this side. So we'll write refund on the credit side out here. So this refund is omitted from purchase account. So if we go ahead and then write this 270, this would be added with the incorrect amount that we have out here. Okay. Then second one is the total of discount received 480 had been posted on the wrong side of the control account. So in control account, when we receive discount, this will decrease the balance, so we write it here. Okay, but instead of writing it on this side, we wrote the amount on the other side here. We wrote this amount here. Now if I want to rectify this, then we need to write it on the correct side, which is on the debit side. Okay, but if we just write 480, this will cancel out this incorrect entry that I have made out here. Okay, so I need to write this amount twice. So the first entry will cancel out the incorrect entry, and second entry will write the amount which should be there on the debit side. Okay, now let's balance this. Okay, and this side we are getting the difference, is 15,140. So this should be my correct balance out here, 15,140. Correct answer for 11 is C, 15,140. Question 12. The draft profit for the year of a business was 84,000. The following error were then discovered. Discount received 2,500 had been debited to the discount allowed account. wages 9,000 had been completely omitted, and sales return of 8,000 had been debited to purchase return account. What was the correct profit for the year? Let's look at this. So the incorrect profit that we have out here is 84,000. Okay, so this is your draft profit. Now, first one, they said that the discount received of 2,500 had been debited to discount allowed account. So discount received is income. We should write this on the credit side, but we wrote it on discount allowed, which is an expense on the debit side. So income was considered as my expense. Okay, so if I treat this, then I need to subtract it from my expense. So discount allowed amount would be subtracted. So discount allowed expense subtracted, that means the profit will increase. Okay, and then discount allowed profit will increase up, and then this will be recorded in the discount received. We'll take it out from expense and put it into the income. Expense decreases, profit increases, and income increases, profit increases. Discount received 2,500. Okay, discount allowed 2,500 and discount received 2,500. It will increase the profit. Next one is wages. Wages of 9,000 had been completely omitted. So wages is an expense. We completely omitted means we did not write this expense at all. So if we write this, then this will increase my expense, which will lead to decrease in my profit. And last one is there's a sales return of 8,000 had been debited to purchase return account. So this is your sales return. Okay, and then this is our purchase return. Now we were supposed to write in the sales return on the debit side out here, but instead of writing this amount on the debit side, we wrote that on the debit side of purchase return. Okay, normally the entry in the purchase return would be on the credit side, but this particular entry we wrote it on the debit side. So sales return is my expense, which should be on the debit side, and purchase return should be my income, which should be on the credit side. But instead of considering this as my income, I wrote it as an expense on the debit side. So this particular entry does not have any effect on the profit. So overall, only these two would affect my profit for the year. So let's calculate our correct profit. And correct profit is 80,000. 80,000 D. Right answer for question number 12 is D, 80,000. 13. Which item would increase the profit for the year? Number 1, increase in allowance for irrecoverable debt, decrease in allowance for irrecoverable debt, increase in prepaid rent expense, and decrease in prepaid rent expense. Okay, first let's talk about the allowance for irrecoverable debt. If you remember, we create provision or allowance for irrecoverable debt every year, and then we compare the amount of the allowance for irrecoverable debt with the previous year's irrecoverable debt. For example, Let's say this is 2025. Allowance for irrecoverable debt is 500, and this is 2026. Allowance for irrecoverable debt is 600. Okay, now this allowance for irrecoverable debt is increasing by 100, so this would be considered as my expense. Okay, 100 more should be added to my allowance for irrecoverable debt. But if my allowance for irrecoverable debt is decreasing, so let's say if this is only 300 in 2026, then this would be considered as my income, because last year I kept 5,000 aside for allowance for irrecoverable debt, but now we need only 300, so 200 can be transferred back to my income account from allowance for irrecoverable debt. So for this first one, and decrease in allowance for irrecoverable debt will increase my profit. Okay, so it is decreasing from 500 to 300, so this would be considered as my income. So if income increases, profit increases. However, if you look at the second one is a rental expense. Okay, so we need to see whether the prepaid rent increases or decreases. So altogether, let's say my rent amount we are paying is 10,000. Let's say prepaid rent is right now 1,000. Okay, for the ease of calculation. Then now the rent would be considered only 9,000. And then let's do this. If I have a gross profit out here, gross profit of 50,000, and let's say rent is the only expense that we have, which is 9,000. So if I subtract that from my gross profit, then I'll get my profit of 41,000. Okay, let's say if my prepaid rent increases, if prepaid rent is not 1,000 but it is 4,000, so in that case my expense will decrease to only 6,000. Okay, and if you can see that my profit is increasing from 41 to 44,000. So it means when my prepaid rent expense increases, my profit for the year also increases. So the right answer for question number 13 is 2, decrease in allowance for irrecoverable debt, and 3, increase in prepaid rent expense. C. Question 14. Sam was unable to conduct a physical count of inventory at 31st December 2024. On 3rd January 2025, inventory was sold to Abdul for 11,950. The cost price of this inventory was 9,560. So he could not count the inventory on 31st, but on 3rd January we have a record that we sold it to Abdul. The selling price is 11,950, but the cost of the goods that we are selling to Abdul is 9,560. Okay, so if you want to calculate the value of inventory, we take into consideration the cost and not sales value or sales amount. On 4th January 2025, inventory had been returned by Sita. It had been sold on 21st December 2024 for 2,390. The cost of this inventory was 1,912. So again here we will take into consideration the cost, and this inventory was sold to Sita on 21st December and she returned it to us on 4th January. That means if I calculate the value of the inventory after 4th January, then this inventory stock will be there with me, which she had returned on 4th. And you can see that on the next line, Sam valued his inventory on 5th January 2025 at a cost of 59,750. So that means on 5th, when Sam calculated the value of the inventory, this inventory includes the inventory which is returned by Sita on 4th. Okay, and the cost of that inventory was 1,912. And this inventory that we are selling to Abdul is not there in this closing inventory which we calculated on 5th. Okay, because this was calculated after we made sales to Abdul. Now question is, what was the value of inventory at 31st December 2024? A very simple approach. Now if we calculate the value of inventory on 31st December, we would not know that Sita would return the product to us, okay, and we would not know that we will sell goods to Abdul as well. So if we reverse this two entry, then we'll get what is the value of closing inventory on 31st December. So right now the value that we have of the inventory on 5th Jan is 59,750. Okay, now on 4th, I'm just going reverse. Okay, on 4th there is return, right? Now we don't know on 31st December that Sita would return this product. So after Sita returned this, I added to my closing inventory. I'll simply subtract that one. Oh, sorry. 1912. Okay. And I would also not know that on 3rd we will sell goods to Abdul of 9,560. So we'll simply add this one. Okay, so 9,560. Because this inventory that we have on 5th January, this was after these two transactions. So the inventory that we have on 31st is this 67,398. So C. Your correct answer for 14 is C. 15. Why does a sole trader account for accrued income? So accrued income is those income which is already earned but we have not received money. Okay, so if we do not count for accrued income, my calculation for the profit would be inaccurate. Okay, in this case basically my profit would be understated. For example, we receive rent of 1,000 every month and we received it till October, let's say from January to October, and November and December rent is accrued. Okay, so now on December when we calculate our income, and if you show that your income received is only for 10 months and consider that as your income, then 2 months rent which you have not received will not be included in our income. So result of that, my total income decreases, and if the income decreases, profit decreases. But as per the accrual basis, if the profit is or the income is earned, then we need to include that. So on 31st December 2 months rent is already due and we have not received it yet. That is considered as my accrued income, so should be included. 16th, the following information is available for a sole trader's business at the end of the financial year: cost of sales, expenses, profit for the year, sales return. What was the total sales figure for the year? So we normally have sales. Okay, and in this sales we'll subtract less return. Okay, and then after you do that, in this you'll subtract less cost of sales. Okay, and once you subtract cost of sales, you'll get gross profit, and in that gross profit you'll subtract expenses. Okay, and then you'll get profit for the year. Now most of this information is given to us, so we'll just fill it up. Profit for the year is 63,000. Expenses which we subtracted was 325,000. Gross profit we don't know, and then cost of sales is 540,000. And then return is also given, which is 30,000. Okay, now we'll go in a reverse process from profit for the year till the sales. Now expense was subtracted. To calculate the gross profit, we'll simply add this two. So that is 388,000. So if I have 388,000 as my gross profit, and in that if we subtract 325,000 as my expense, then we'll get profit for the year as 63,000. Okay. And similarly, when I subtract cost of sales from my net sales, I'll get gross profit. So to calculate this one, I'll simply add them, and that would be 928,000. So 928,000 should be my net sales. In that, if we subtract the cost of sales, then we'll have a gross profit of 388,000, and my return was subtracted from the sales to find out the net sales. This is your net sales. Okay. So simply add them, and then that is 958,000. So 958,000 was the sales figure. For question number 16, 958D. That is our correct option. 17. A partnership maintains both capital and current account for its partners. What is the correct accounting entry for recording interest on capital for partner X? Partner X received interest on capital. This would be credited in the current account. So the correct journal entry is interest is given from appropriation account. So appropriation account debit and current account credit. So correct answer for 17 is B. Appropriation account to be debited and X current account should be credited, because they are maintaining both capital and current account. In current account, all the appropriation items would be recorded, like interest on drawings, interest on capital, partner's salary, share of profit. Everything will be recorded on the current account. And in capital account, we only write down capital details, like how much partner invested, or how much additional money partner has given in the business. 18. Okay, Arnold is in a partnership with Bradley. Their financial period ends on 31st December. One of the terms of their partnership agreement is that interest is charged on drawings on monthly basis at the rate of 5% per annum. Arnold made the following drawings during the year on the date specified: 31st March 6,000, 30th June 10,000, 30th September 12,000, and 31st December 8,000. What was the correct treatment of interest on drawings in the appropriation account for the partnership? So interest on drawings should be added in the appropriation account. So that is the first thing that we do after we get profit for the year. We calculate interest on partners drawings, and then we'll add back to the profit, because these are the money that partner owed to the partnership. So let's calculate the amount. So this is for 31st March. Amount is 6,000 and 5% is the interest that we are charging, so divided by 100. Now from March to December, so March 31st, January, February, March, 3 months gone out of 12, so 9 months left out of 12 months. So we'll calculate amount in that. Okay, that is 225. And then on 31st or 30th June, that means half of the year, 10,000 was the drawings and 5% interest. So 6 months out of 12 months for which partner has to pay interest. Okay, so let's go back and then add the formula, and that is 250. Next one, on 30th September, 12,000, 5% interest, and from September 30th, so September is gone, October to December, 3 months, so 3 divided by 12. For this many months partner has to pay interest, and that is 150. And last one is 31st December, and that is 8,000, but that is the last day of the year, so 5% interest, the partners would not pay anything. Okay, 0 months out of 12 months, so the interest will be 0. So the total interest this partner paying to partnership is 625, and this would be added with the profit for the year. Okay, so correct answer for 18 is A, 625 added to the profit for the year. 19. Which statement is correct in relation to the financial statement of limited company? Number A, debenture are presented as a part of total equity. Debenture is a liability, non-current liability, so it cannot be treated as equity. B, dividend paid is shown in the statement of changes in equity. So when we prepare statement of changes in equity, we will write down dividend and only dividend paid. Answer B is the correct answer. But let's look at C and D as well. Proposed dividend reduce the balance of the retained earning. So proposed dividend we do not record at all. Only dividend paid are recorded. And number D, the gain from the revaluation of non-current asset is added to retained earning. Revaluation or the gain in the revaluation would be recorded in the equity but not under retained earning. We'll have a separate head as revaluation reserve, because this is a capital reserve, so we'll write it as revaluation reserve and not under retained earning, which is our revenue reserve. So correct answer for 19 is B. And question number 20. A company provides the following information about its equity: 150,000 shares of $1 each, 150,000. Then share premium 75,000, general reserve 125,000, retain earning 25,000. The director proposed to issue bonus shares on the basis of 1 share for every 3 already held. Following this, the director intend to make right issue on the basis of 1 new shares for every 4 share held at a premium of 0.20 per share. Okay, so face value is 1, premium is 0.10, so we are issuing each share at 1.20. So what will be the total equity of the company after share issued? Very simple. There are two things that is happening. One is, first let's look at the shares. Okay, so this is our ordinary shares, 150,000. Then we have share premium, that is 75,000. Okay, and then we have general reserve, this is 125,000, and then we have retained earning, that is 25,000. Okay, now if we add all of this, this is my total equity on this date. Okay, first thing that happened is bonus shares. Now bonus shares, they said that the director proposed to issue bonus shares on the basis of 1 share for every 3 held. So right now each share is $1 each, and total shares that we have is 150,000. So if we issue bonus shares, then bonus shares would be for 150,000 shares, 1 share for every 3 share held. So into 1 divided by 3, which will give you 50,000 shares. And each share is $1, so $50,000. So we need to add $50,000 in our ordinary shares. But this is a bonus shares, so it would be issued from the capital reserve. And capital reserve that we have here is share premium. And if the capital reserve is not enough, then we can use the revenue reserve. But right now we have enough money in capital reserve, so we'll subtract it from here, 50,000. Okay, now after this, because it is following this, so first we issue the bonus shares, and after you issue bonus shares, if you look at here, these are the figure that we have in each of the heads. Okay, now the ordinary share total is increasing from 150,000 to 150,000 to 200,000. Now after this we issue right shares. Okay, and the right shares, it says that we'll give them make a right issue on the basis of 1 new share for every 4 share held at a premium of 0.20. So first let's calculate the number. So we have 200,000 shares right now, and we are planning to give 1 for every 4 held, that is also 50,000. Okay, so we are issuing 50,000 new shares, and share par value or the face value is $1, and face value will be added out here. So 1 into 50,000, so 1 into 50,000, this is for the ordinary shares out here, 50,000, and 0.20 into 50,000, this is for the premium. Okay, and that is 10,000. So the new value of the shares now we have is 250,000, and this one is 35,000, 125,000, and if I add all of this, the value of the new shares that we have is So new equity that we have is 435,000. So it's increasing from 375,000 to 435,000, and that is the total equity that we have after all this issue. So correct answer for question number 20 is B, $435,000. So with this we come to the end of today's video. If you have any question, concerns, please write in the comment and I'll see you in our next video. Bye. Have a nice day.